Hey traders, Nick here reviewing Apple. They just reported and Wall Street likes what it saw. One thing was for sure with Apple, it was not going to stay where it was. I saw either a complete correction, and I'm talking down to 150 below, or a complete upside reaction, erasing all the malaise into Apple that we've had recently. If you remember correctly, the biggest problem with Apple was Taiwan Semi when they reported. They basically, the Wall Street made another mistake. Same mistake they've done all the time. Every time they see a supplier say something that could be construed as this Apple problem, basically extrapolating a problem that one of the suppliers has into saying that Apple's going to have a disastrous quarter, they're going to miss their numbers, etc. That didn't happen. So they just reported a report. The skinny on it is the short story on it basically is that there's no hair on this report. You can't nitpick any part of it. Okay, so first of all, revenues were up. They beat and beat, and guidance was strong. So there was no letdown from that perspective. Plus the fear that iPhone sales were terrible. You remember, oh my God, the iPhone 10, they're making fun of it. Well, guess what? iPhone sales are up huge. At least they're up in units, I think 3%, up 14% in revenues from the iPhone, which means pricing is getting stronger, which means they're probably selling more of the expensive stuff than the above 1,000 phone than anticipated. So what the heck were they talking about? Right? They were just simply extrapolating problems in Apple stock from the suppliers like Taiwan Semi that started this whole thing. At least put a big highlight on it. So fundamentally, it's still on rails. Also, they said that they're up 31% on the services, which is income from services, which is what everybody likes because there's no hard cost, there's no production delays or anything. It's just they provide a service, whether subscription or whatever. I don't know what falls in there, but that's in there and that's growing. 9 billion of in that, actually over 9. The buyback, there was also a headline on buyback, $100 billion in new buyback programs. Now, they don't have to live up to that, but they have been in the past, so I don't doubt them. They don't fear the trade tensions. They basically say what we've been saying, that cooler heads will indeed prevail between China and the U.S. because we both have a lot to lose. And it's on both of our interests to actually do business together and play well together. And if Trump is really a businessman like he says he is, then we should be okay because China, so far, on the face of it, is playing nicey-nicey. We got the Korean War taken off the table because of them, in my opinion. All right, so, and bonus, they upped the dividends 15%. Maybe not a huge increase, but it's an increase nonetheless. So what are they going to short? The gross margin didn't fall apart. The sales didn't fall apart. They over-delivered on everything. They added to their buyback huge, and they added to their dividends. And the guidance is okay going forward, and they're not worried about China war. What are they going to sell in that stock? If they sell it in the open, if it spikes and then falls, it's an opportunity to go long, in my opinion. Under the umbrella of this market is not going to correct, therefore I can go long Apple. If my thesis overall is still long, then I can go long Apple. I'm already long Apple, like I've been saying, via trades here and there, and I left some runners. And so tomorrow morning, if we spike, I may book at the top of the spike, but I'm not shorting the stock on the spike. I have a friend of mine who will short it at the spike because he believes it's going to 150 below. Still, he doesn't listen to news, so he's just a pure technician. It's technicians versus fundamentals. Without a major headline for the whole market, I just don't see a scenario where Apple's going to go to 150 below. And so if I wanted to own Apple at 150, I'd sell a 150 put in it. Plain and simple. But if the market's correct, then it will fall. Okay, looking at the charts now. Enough with the... So basically what I'm saying is, fundamentally, this report should not be shorted. That's my opinion, fundamentally, okay? So Apple, this green zone, has been pivotal. Why? Because back in September, it was resistance, and then they broke out from it with force before the earnings. And then we had a couple of scares, but they fended off. Here we had a dip below. That was a February correction. Everything overshot to the downside. So this could be considered as support because eventually we sprung in a V right above it. That's a daily, by the way. So you can tell in just a few days and back to new highs. We set a new high. That's so important. fell apart from it. We tried again, we failed, so that's not good. Fell apart, and here we are trying. And where is it right now? As I'm speaking, it's at 175-ish. It was up to 178. So not good that they stopped right here. So tomorrow I want to see versus 178 what happens. If we visit it during the open session, then it's definitely a make or break line for the bulls. So if I wanted to short it up here, I would buy a debit put spread or buy puts for somebody who's trading fast. Other than that, fundamentally out in time, I just don't see why I want to short it. If I'm long it, I don't see why I want to close it. I may trim some profits, but the zone right there, pivot zone right here, held for now, which makes it a problem going forward if we correct as a market. Let's say the Fed hikes rates. All this is for naught, because we might retest that, and if we lose this zone, we might fall to that number where they think it's going to below 150. So Apple centric, I don't see it going down below. Do I see a scenario where it can fall down below? Yes, but it's macro, not Apple problem. So I hope this is clear. To summarize, number one, fundamentally Apple deserves to be higher down the line from here. No doubt about it. Absolutely, 100% based on fundamentals. Number two, are we in the clear? No. Why? Because we still have threats from the macroeconomic environment and the Fed. Now, the Fed is no longer our friend. I said that a year ago, a year and a half. I was early, but nobody was listening. And I was early with regards to price action. So the possibility of a breakdown is there, but not because of Apple fault. Levels to look for tomorrow, the highs of the overnight here move. So right here is 178. I don't know what's going to happen overnight. I don't know what they're going to do, say on the call. I don't know if they had the call already. I don't know. But I'm telling you that tomorrow morning the technicians will be looking, oh, why can't it break the overnight, the spike, the initial spike? So pay attention to that level. I'm signing out for now, but I'm open to questions. sellspreads@gmail.com is the email, or you can just message me however you usually do.